Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, as usual, let's take a look at the gold market. As you can see, reaction on the yesterday's poor ISM numbers was not really significant, compares at least to the euro, currency or some forex markets, other currencies. Yes, we see some bounce out from our confidence support in the daily chart, but it's really very shy action, and mostly you can see on the range of the yesterday session and the day before, it's almost the same. So market stands approximately the same range, so no big reaction. Market even hasn't retested this trend line on the triangle. That confirms that market really currently is very tight, and investors just wait. So even ISM numbers wasn't able to push market significantly in the upward direction. Maybe this is the sign also some existence of some bearish pressure on the gold market. Maybe our investors right now already starting to expect some good numbers and prepare themselves for possible starting to selling the gold, because only by this reason we could explain very shy reaction on the gold. On the forex market, reaction on the ISM was really more dramatic, more significant. And the ISM has confused the trading plans analysis, and so it brings in indeed something new. Maybe it's not really significant and important, because as you know, mostly the ISM numbers should be watched in the progress. So it should be some kind of the trend within the at least the 5-6 months of the numbers below the 50. And this will indicate the contraction in the economy, while the just single numbers below 50 could mean nothing. So because previously, as you know, ISM was strongly above the 50 for a long period, and it's just some black spot on the expectation of the possible rate hike by the Fed. That's why in the gold market, as you can see, reaction is a bit shy. That's why also, guys, from our point of view, you probably remember our analysis that we will wait what will happen around our confidence support. It's 1290 at 1308, so our major level, and we will be mostly watching what will happen by today's numbers. Drop below it probably will trigger massive sell-off that we expect for a long period already. So that we see that retracement to the 1160, 1180 area should start. And it probably should happen just by the market mechanics. This is just how market works. And so this is not the question of whether it will happen or not. It's just a question when this will happen. And maybe currently, guys, mostly investors still keep longs, despite even this drop. Not major stops have been triggered yet, and this decrease hasn't led yet to the massive sell-off. But if market will drop below it, below confidence, below monthly pivot support 1 here, this probably will happen. So investors start to sell, especially if market will take out the lows of this Brexit candle. This will be important. So erasing of this Brexit candle and drop below it, this will be very significant impact on the sentiment on the gold market, because too much long positions right now stands on the hand of the investors. So they should be reload, and that will let market to continue the bull trend. In the current conditions, nobody has the possibility to purchase more gold. As you understand, it's impossible any upward trend continuation. That's why we think that if indeed payrolls will be bad, market show up prediction, this will be very temporal. So this will happen only for the short term. Some kind of the mostly emotional splash here, but not really upward continuation, because market just has no capacity to do this. So on the intraday charts, guys, we also do not see something really special. On the follow time frame chart, some trend down, some channel, as you can see, is developing. Market hasn't quite reached 1618 target of this ABCD, and hasn't quite reached ABCD yet here. So some few cents to the target will exist. At the same time, guys, here we have some tricky moments. So for example, if you will build ABCD pattern right from the top where indeed drop has happened, you can see that market has completed it by this action. Market has tested it and then started up, action up. But still, I think that the major pattern still stands on the daily, this one. That's why probably the market will complete this one, simultaneously will complete this one as well. On the hourly chart, also nothing really special. Some hint on the possible head and shoulders pattern here, bullish divergence. But guys, in general, as I said, yes, these patterns looks not bad, but we know that the non-farm payrolls release will be the major driving factor today. And as was discussed, any action will be probably significant in one or other direction. That's why we currently do not see any reason to trying to anticipate and to be hurry for a few hours trying to take the position in advance of the non-farm payrolls release. Because if drop will happen, you should understand that the upside potential is significantly lower than the downside. That's why if you will put the bet on the possible upward action here based on the patterns that now are forming, that's non-farm payrolls will be poor, it will be very significant risk. Downside. What will happen to the upside is very difficult to suggest, because as I said, market has no capacity to continue move full trend to the upside. So maybe it will be just some emotional, some technical reaction on the bad numbers. But to the downside, guys, if this is where right now mostly gold market is standing in terms of the sentiment, because positions that investors keep on their hands should be sold out. That will let market to continue bull trend in the future. That's why it's not really equal, let's call it sentiment view on the market right now. Not equal balance. From the sentimental point of view, downward action, it's a bit more desirable, let's call it, from the just based on the positions that investors right now keep on their hands. So yep, I hope that you understand me. So that's our view on the gold market. That's why we mostly think that it's better to wait what will happen in the non-farm payrolls release, because drop and really good numbers will open the road to the significant retracement down, and we easily will be able to take the position in much safer moments, not without any necessity to anticipate what will happen and taking the risk of uncertainty right now. So let's just wait for a few hours and see what we will get.